the difference between an FHA loan and a conventional loan? Do I even qualify for anything? And here's the one thing most people think: there's like one path into home ownership. Like it's this one gate, and either you get through it or you just don't. That's just not true. There are 4 major loan paths, and depending on your situation, your credit, your savings, whether you've served in the military, even where the house is located, one of them is probably a much better fit than you'd guess. So let's walk through all 4 one at a time. No jargon, no pamphlet speak. Just here's what each one actually is, who it's actually built for, and what it actually takes to qualify. So by the time you're done, you'll be able to look at your own situation and go, oh, that's possibly for me. Probably because people don't really know that there's so many different options out there. They only think there's one because they don't ask questions. They don't want to be vulnerable and lay their situation out. Hi, I'm Cheryl Sears. I'm a realtor here in Texas, and this is Real Estate Real Answers, where we cut through the confusing stuff and just tell you what's true. Today we're covering the 4 big ones: conventional, VA, and USDA. And I want to be upfront. This isn't going to be a list of definitions. I'm going to tell you the actual numbers, the actual credit scores, and the actual down payments, because that's the stuff that actually helps you. And along the way, I'll tell you who I see each one works best for in real terms. By the end of this, you're going to know which one probably fits your situation. And honestly, you might be surprised. A lot of people rule themselves out of a loan they'd actually qualify for, just because nobody ever broke it down for them like this. Let's start with one most people have heard of, but honestly, most people get wrong. Conventional is kind of the default loan. It's not backed by a specific government program the way FHA, VA, and USDA are. It's a standard mortgage, usually through a bank or a direct lender, that follows guidelines that are set by Fannie Mae and Freddie Mac. And here's what people don't realize. You do not need 20% down for a conventional loan. That is a myth that will absolutely not die, and it stops so many people from even trying. For a primary residence, you can get into a conventional loan with as little as 3% down, and your credit score just needs to be 620 or higher. Now, 3% down is the entry point. Most buyers put down more than that, and there's a good reason for it. If you're under 20% down on a conventional loan, you're going to carry private mortgage insurance, or PMI, until you build up enough equity. It's not a deal breaker, it's just a cost to factor in, and it usually drops off once you hit that 20% equity mark. The numbers shift a little depending on what kind of property you're buying. So if you're buying a second home, like a place you're not living in full time, but it's not a rental either, that minimum down payment goes up to about 10%, still at the same 620 credit score. And if you're buying a rental or investment property, you're looking at about 15% down minimum. And depending on how many units are on that property, that number can climb even higher. I can't tell you how many buyers come to me assuming they need to pay that 20% down, and just don't try it. Here's who I see conventional work best for. Buyers with steady, well-documented income, decent credit, and at least a little bit saved up in the bank. It's flexible. You can use it on almost any property type in almost any location, which is more freedom than some of the government-backed options give you. So if you've got decent credit and even a modest down payment saved, conventional is probably more within your reach than you think. So don't let that old 20% down idea talk you out of even looking into it. This is where FHA comes in, and honestly, this is one of my favorite loans to talk about because it opens up the door for so many people who think the door's already closed. FHA loans are backed by the Federal Housing Administration, and they exist specifically to make homeownership more accessible, especially if your credit isn't perfect or your down payment savings are thin, or both. The numbers here are honestly pretty remarkable. FHA will go all the way down to a 500 credit score. Let that sink in for a second. A 500. Not saying that's bad, but if you're in that 500 to 579 range, you are looking at a 10% down payment requirement. So it's not exactly free money. There's a trade-off. But once your score hits 580 or above, your down payment requirement drops all the way to just 3.5%. Life happens. Credit takes a hit. I bought a car, made a bad decision. This doesn't have to be the end of the road. And FHA isn't just one single loan. There's actually a whole family of programs under that FHA umbrella. There's FHA 203K, which lets you buy a home and roll renovation costs into that same loan. So you're not trying to qualify for a separate construction loan on top of your mortgage. That one honestly deserves its own full conversation. So we're going to come back to it in a future episode. There are also specialty FHA programs built for specific groups, things like reduced pricing and improved terms on certain HUD-owned properties for public servants like teachers, firefighters, police officers, medical professionals. If that's you, it's worth asking your lender directly what you might qualify for there. The big takeaway I want you to leave with is FHA is not just a backup plan for people who couldn't get anything less. For a lot of buyers, it's genuinely the best option on the table, full stop. If you're a veteran, active duty service member, or in some cases a surviving spouse of one, this next one might be the best loan out there, period. Hands down. Not best among government programs, the best, period. VA loans allow for 0% down, not 3%, not 3.5%, 0. You can finance the entire purchase price of the home, and the minimum credit score sits at 500, which is the same floor as FHA's lower tier, but here's the difference. You don't get hit with that extra down payment requirement the way that you would with the FHA at that lower score range. There's also no private mortgage insurance on a VA loan, which is a real ongoing monthly savings compared to a lot of other loan types. Instead, there's typically a one-time funding fee, but that's a very different cost structure than paying PMI every single month for years. VA loan eligibility and entitlement mechanics can get detailed, so I do encourage you to talk to a VA experienced lender about your specific situation rather than giving specific figures here. I will say the entitlement side of VA loans, how much of the benefit you actually have available, whether you've used it before, all of that can get detailed fast, and it really does depend on your specific service record and history. That's not something I'm going to try to map out for you here on camera. That's a conversation for a lender who specializes in VA loans, because they'll pull your certificate of eligibility and walk you through exactly where you stand. But here's what I want you to take away. If you've served or you're related to someone who has, please don't assume that this doesn't apply to you and that it sounds too good to be true. It's real, and it is genuinely one of the most underused benefits I see out there. I've had conversations with veterans who had no idea that this was even on the table for them. Not just farmland. Last one, USDA. And this is the one that throws people off the most because they hear USDA and immediately think farmland, tractors, acreage. And that's really not what this is about. USDA loans are actually about where the property is located, not what it's used for. They're designed for homes in eligible rural and certain suburban areas. And here's the part that surprises people. I live and work right here in the DFW Metroplex, and more of North Texas qualifies than you'd expect. We're not talking exclusively about far out farmland. Plenty of smaller towns and outlying communities around the Metroplex fall into that eligible zone. The terms on these loans are excellent. USDA loans require no down payment at all, 0, same as VA, and the minimum credit score is 640. There are eligibility maps that exist, and buyers should check the specific addresses on those. So if you're looking a little outside the city core, maybe you've been searching in Forney or Royce City or Quinlan, somewhere with a little more space. I even have homes listed and available right now in these communities. This is absolutely worth asking about before you roll it out. Don't assume that you don't qualify just because of the name of the loan. Okay, so let's bring it all together real quick, side by side. A conventional. You get as low as 3% down with a 620 credit score, most flexible on property type, but the PMI applies below 20% down. FHA, you get 3.5% down at a 580 credit score, or 10% down if your score is between 500 and 579. Great for buyers rebuilding their credit. VA, 0 down, 500 credit score, no PMI for those who've served. USDA, 0 down, 640 credit score for eligible rural and suburban areas. More places qualify than you'd think. 4 completely different paths, 4 completely different sets of qualifications. And here's my honest take. Too many people talk themselves out of homeownership because they assume they only have one option available to them, and it happens to be the wrong one for their situation. Picking the right loan is as much a getting to know your situation conversation as it is a numbers conversation. If you're not sure which one fits your situation, that's genuinely what I'm here for. Send me a message or drop me a comment with your situation, and I'll point you in the right direction or connect you with a lender who can pull real numbers for you. And if this helped clear things up, subscribe. I'm doing a whole series like this. Real conversations about the stuff nobody explains clearly. Next time, we're talking about down payments and gift money because there's a rule in there that trips up more families than you'd think, especially when relatives want to help out. I'm Cheryl Sears. Talk soon.